one bad month is not a trend. One bad week is even less of a trend, right? And of course, can depend on sales cycle length, etc. But typically, a quarter at least is a good time period to look over. This is the question to answer. This is a super important question to answer. Can we pinpoint a particular downward trend in our analysis, or is this a broad downward trend that is consistent across all channels, all regions, etc.? Hi everyone, welcome back to Demand Decoded. Dan here with you today for a solo episode all by myself in the studio, but hoping I can bring you the same kind of level of insight as we have, the past few weeks. It's been ages actually since I last did a solo episode, which are fun sometimes. Probably harder to bat around some ideas, but I've got my friend talking points in front of me here, and in today's episode I want to talk about when things go wrong in marketing, when the numbers drop, when pipeline goes down, when your MQL numbers go down, when close one pipeline goes down. Basically, we focus so much content, and this isn't a bad thing necessarily, because we're always trying to be positive, right? And focus on growth, increasing leads, increasing pipeline, revenue. But this episode flips that. And actually, I want to focus on what happens when pipeline is down, because inevitably for us as marketing leaders, at some point in time, pipeline is going to be down, year on year, month on month, on target. You're not going to be hitting the number that you should be hitting. And there are so many reasons as to why that is. It doesn't mean you're a bad marketer. It doesn't mean that the business is going to go into administration and everybody's going to lose their jobs. There are so many factors that roll into this. But what's really important as a marketing leader is being able to actually understand why this is happening, diagnose the issue, understand if it's a blip or a trend, the diagnostic process, the data that you need to look at, the external factors that you need to look at, and then bring back to the business as well. And actually then think about what things can you do in order to increase pipeline or revenue. In this example, I am going to be framing it a lot around pipeline, because I just think it's the metric that comes up most, because whilst it does have a longer term outlook than something like leads, it is also the thing that is closer to actual business success based on, conversion rates. So when I'm going through this, I'm thinking from it in the viewpoint, if pipeline is reducing, if your pipeline is down, what can you do about it? Before we get into the podcast today, here's a quick word from our sponsors, HubSpot. Nobody likes a spoiler, unless it's your customers telling you exactly what they need. But too bad most businesses miss out on these signals. The hints dropped in emails, the messages hidden in call logs and chats, all of it's just trapped in unstructured data. But with HubSpot, you get all of this data in one place. Their customer platform brings together the insights you need to grow your business. And spoiler alert, the more you know, the more you grow. Visit HubSpot.com today to find out more. I also think one of the really interesting things with this whole conversation is that being part of a lot of marketing teams over the years, like this is a conversation that happens again and again and again, because when you get round to the reporting cadence that the marketing leader has at the management, at the board level, whatever it may be, it's probably going to be monthly or at least quarterly. And you often have these conversations internally, especially as marketing teams first, because you see the numbers coming, you see them happening before you even have to report on them. But most people just don't actually speak about this outside of your own internal teams. So it's a quiet conversation that happens, but is rarely openly discussed or like systematically thought about and solved. So yeah, I think we want to. Well, I say we. It's just me today. I want to talk through the process of the analysis, the uncertainty, the decisions that you can make, and hopefully take you in the minds of like what we do here, and how to diagnose the issue and ultimately overcome it. Because again, nobody should be finger pointing here and saying, oh, it's marketing's fault that this is down. There will be fundamental reasons as to why, whether that's internal or external factors. Your job is to understand why this is happening and to actually act on it, or you might decide not to act on it if it's not a trend that is significant enough to warrant action and a complete pivot in strategy, perhaps. Okay, so chapter 1 of this book, I suppose, is recognizing the dip. Understanding, is this just a blip in time, or is this actually a downward trend that's going to continue? I don't know about all of you listeners, but I've been in businesses before where one slight downward blip, if we think about, the red candles, I suppose, can just cause absolute carnage, and everyone's freaking out and everybody wants to, change strategy or run short-term plays in order to, boost pipeline, boost the amount of leads that we're getting, just chuck stuff over to sales as fast as we can so they can try and convert it. But the number one thing we need to understand first, if there is a dip in pipeline, for example, is this just a blip in time, or is this actually a trend that's going to continue? Because the temptation with all of this is to act on it immediately, right? We're going into our management reporting, and we've got some downward stats. It might be month on month, we're down 10%, 20%. And of course, the temptation is to say, right, here's what we're doing. We've changed this, we've changed that. We are acting on this immediately. But often the smarter move is to wait, gather some more data, and actually complete your reporting period before you start to draw on all the conclusions in order to make a decision. And I suppose a useful approach to this is to have your checkpoint in mind. So that could be, in a lot of cases, it will be the end of the quarter. So you can actually understand if there has been a dip that is sustained over a period of time and gives you the pattern that's starting to play out. Seasonality is something that is often cited as an explanation, but actually for a lot of B2B businesses thinking mid-markets, seasonal patterns aren't actually that reliable compared to well-established businesses and large organizations to lean on, and often are used as a potential excuse without any meaningful data to back it up. So I would also take caution when trying to lean on seasonality as an excuse for dips. If the data is telling you otherwise, then obviously you need to lean on that. I suppose the key point here is that there's a real risk of acting on incomplete information, and you need proof before you start to radically restructure anything. There is a reason why you are doing the activity you're doing, why you've invested in the areas you've invested in, why resources managed in the way it is. Because if you set your strategy at the start of the year or at the start of the quarter, whatever it may be, you've done that with the knowledge of everything you had at that time, like the strategy of the business, the market conditions, your goals ultimately, and to all of a sudden just totally flip that, do a complete U-turn and start to move budget, move resource, and deploy shorter term tactics that can impact the long-term achievement of those goals can be really, really damaging. So the main thing here is to have proof before you start to radically restructure anything. And in principle, it's not about being complacent. It's just about knowing when you have enough proof that this is something you need to act on, because one bad month is not a trend. One bad week is even less of a trend, right? And of course, this can depend on sales cycle length, etc. But typically, a quarter at least is a good time period to look over, and then multiple quarters and see how you can act on that. So, it's really important just to give yourself this time window to understand if this is actually truly something you need to act on immediately, or if this is something that you should wait out, not completely diverge your strategy from, because that is in the best interest of the long-term success and the long-term goals of the business. Okay, so now let's talk about the diagnostics. Chapter 2, what data to actually look at. Because when we are doing this level of analysis, when something is going wrong, it's really, really important to have all of the data available to you that's going to help you dig into this and diagnose it properly. I suppose point number one on that actually is having the data, right? If you are in a situation where marketing is disconnected from pipeline and revenue, it's going to be really hard to trace any of this back to the source. And, this is where the disconnect lies. And we've spoken about this time and time again on the podcast about the importance of having a full connected view all the way from first contact all the way to close one revenue and even lifetime value and customer success within that. So I'm assuming in this podcast that you've got that set up and your ability to measure things and diagnose properly is set up. When I think of a diagnostic in this case, it's really about layers and understanding all the different layers available to you, because whilst it can be really easy to say, oh, we've had a drop in pipeline, we've had a drop in leads, let's just focus all of our attention on that one particular object, on that one particular reporting mechanism, actually understanding, pipeline, lead volume, sources, channels, regions, quality, like all of these things, all of the offline things as well that come into the business are really, really important. So let's now think about this model, right, that we have here. So the first thing that we want to look at is ultimately how the business closing pipeline right now. So closed won pipeline split out by pipeline sources. So pipeline sources go beyond marketing here. And I think this is a really important point to think about as well, because our ability to influence the business, to achieve the business goals, doesn't just sit within leads that we can generate through ads and through the website. It's actually all of the pipeline sources we have available to us as a business. So when I say pipeline sources, consider things like, of course, you've got the website in there, you've probably got events in there, but what about your partners, your channel partners? What about outbound? What about referrals? What about networking? All of these things that produce pipeline from offline sources as well need to be tracked and measured in a consistent way, because it might be that pipeline has dipped and your CRO is bringing this to the table during their reporting, and you're trying to understand as a marketing leader why that has happened, because all of your metrics are looking great. And I did speak with Josh on a previous episode, which was quite funny, about how in boardrooms he's been in situations before, right, where you've got the marketing leader saying everything is going really well, but the sales leader saying actually, like the leads are crap and everything's going badly. But it is important to understand, okay, well, is that a issue with marketing's sourced leads and pipeline, or is this actually channels that are still within marketing's ability to influence and have some control over in a way that they can help support it, but it's not a dedicated marketing channel per se? And here I might think of partners as one, right? A lot of technology businesses, all businesses have partners to a certain extent, but how important they are for generating pipeline for you does vary based on business and based on industry. But it might be that you've got some great technology partners that are referring lots and lots of business to you, but things have changed there, and maybe they're seeing less demand, or there have been structural changes that mean you're not having as much pipeline being referred to you by those businesses. So you want to understand, okay, how much pipeline am I generating by partner? Has a particular partner dropped, for example? Or outbound? However we split outbound, it might be by rep, it might be by industry or service. Have one of those things dropped? Or essentially we're taking the top level of sources, like pipeline sources, all online, all offline as well, and then breaking those down to the next level. And initially what we want to see is how are they converting across the board? Like, is there a particular channel that continues to convert well for the business? Because that's the main thing, right? If we're struggling to create as much pipeline as before, but we are converting our pipeline into closed won at 50% higher conversion rate, then actually we need slightly less pipeline in order to hit our goals. And it might be that your focus as a marketing team have been on helping accelerate that pipeline through. So it's setting those expectations that whilst we've been focused heavily on conversion, our net new acquisition has dropped a bit, but overall the business is in a better position because we've been able to convert at, this amount higher. Now, that conversation is a difficult one to have because no business wants less, right? No business wants to have less pipeline. They want to do both. They want to be able to convert at a higher rate and also generate more. So that is a careful line to tread, but it's an important note that you can absolutely make. And the fact is that we've been able to convert a lot more revenue as a result of this, and our conversion rate will help us continue that into the future as well, whilst we continue to work on now building up the pipeline again. The point with sources, offline and online, is to not make assumptions about where this is coming from, because we will all have assumptions in our mind when pipeline has dropped, when leads have dropped. We'll think, oh, something's happened there. That's probably what it is. But it's basically to figure it out, find where the drop is, rather than just assuming where it is. When we think about, digging down a level deeper into those channels, so it might be splitting out your partners by the individual partner, etc. It might be splitting out website then by self-reported attribution as well, and seeing what self-reported attribution channels are giving you, pipeline across the board. What's dipped, what's raised, what's converting highly, what's not converting highly into closed won. And, this is like marketing attribution reporting in a sense. And we've spoken about self-reported attribution a ton on this podcast. But the value you get from here is, like, there's a reason why we speak about it, and there's a reason why Chris Walker introduced it as a reporting mechanism, as an attribution mechanism, well, I don't 5-6 years ago, maybe even longer. And yeah, it's a reason why so many marketers have adopted it since, because it is a fairly reliable way to actually understand the things that are having an impact on your buyers without needing inaccurate software attribution that is just unreliable and might divert your attention elsewhere. It also has the ability to reveal sources, reveal areas that are positively impacting marketing in your business that you perhaps didn't know about before, right? So there might be channels that you had no idea your buyers were using to find your business. You had no idea you were being referenced or found, and self-reported attribution can actually reveal those for you. So there's a whole suite of benefits in there, but that's the next level down. So we're looking at pipeline, sources, digging into each source and the attribution layers within each of those sources. Then we can actually come down another layer and look at leads by the same kind of sources. Essentially, we're just trying to split out our pipeline, split out our leads in a sense by every segment of the business that could be independently impacted. So I'm thinking geography, right? Is there a particular region that is having the biggest pipeline impact? And then by region, split by channel, by region, split by pipeline source. Yeah, like you're layering these things together. Is there a particular service area that has been impacted most? Is it a particular industry that you're not generating as much pipeline for as you were before? There are, again, different layers that you can just add together, like in stacked reporting, to actually figure out, is it a combination of a geography plus a channel that's had a bit of a hit? Is it just one geography? Is it just one channel? Ultimately, you're trying to give yourself the most data possible in a meaningful way to actually understand if this is a true drop in pipeline, or a trend in pipeline dropping, or just a blip. When we think about channels, as we often do in marketing, the key question to ask for any given channel is, did it used to contribute to pipeline? And does it still? If not, is that shift recoverable? And this is kind of going into the next section now, which is like external factors, but channels are often going to be impacted by buyer behavior shifts, by new emerging channels, new ways of discovering information, new ways of researching and evaluating. You think of AI search, right? There are so many ways that the buyer journey has been impacted by the introduction of AI search, the rise of AI search, which is just like dominating the research phase for most industries now, that Google search and pipeline and leads generated from Google search is naturally dropping. And this isn't a inwardly looking thing for your business, something that you're doing that is having an impact here. You could have the best SEO strategy in the world, but the fact is that technology has changed around you, so buyer behavior has shifted to this new channel that ultimately you now need to go and figure out. I even think about the evolution of AI and how much harder that actually could make it for marketers to influence what happens earlier in the buyer journey. I think this could be positive. We're going to move into an area where close rate, deal quality, pipeline is going to be forced as important signals alongside like volume metrics, just because our ability to actually have tons of influence at the start of buyer journeys is just going to become more and more disconnected from the experience because it's owned by AI and that experience is curated for them, and our ability to influence that as businesses, as marketers, is getting less and less. I added a question in here because I thought this is a good one to answer, which is, what does it mean when lead volume is high but pipeline doesn't follow, and how do you investigate that gap? Because this is a thing that I've come up against in numerous businesses and have heard being called out as a problem, right? Marketing are generating lots of great leads, lead volume targets are being hit, but pipeline isn't following. The conversion rate of those leads is really bad. And I suppose the things to look at here are directly within your CRM most of the time, if you've got it set up right. And this is all assuming that you do have that visibility intact. And again, this comes down to like RevOps and the connected revenue engine that you build in your business, because there are, let's also assume that this is in a state where marketing and sales are aligned, because there can be lots of misalignment issues that cause marketing to generate lots of leads, sales to also generate lots of leads, and none of them are converting. That's a organizational structural change that means often there are disconnected targets, disconnected goals, there are fundamental core issues that need to be solved in the business so that everybody is aligned on the strategy and everybody's aligned on the data we have available to us and what needs to happen with that. So let's say all of that's cleared up, marketing and sales are finally aligned on leads that require follow-up, how they actually were engaged in the first place, why they've become a lead, and what needs to happen with them. We've got some things to look at here, which is disqualification reasons are super, super important when it comes to figuring out why a lead is bad quality. So having disqualification reasons that actually mean something to your business is super important. This could be because of budget, time, not the right economic buyer, all disqualification reasons you would typically have, but they have to mean something. Without good disqualification reasons, you're kind of just guessing at what's wrong with the lead. If it just says disqualified, it's not telling you enough. The next thing to look at is the company information. So what kind of companies are being generated as leads? Are they the same kind of size as before? What kind of industries are they? Are we dropping leads in one particular industry and increasing in another? Oh, okay, but perhaps that's decreasing overall quality because the lead, let's say it was healthcare before, healthcare leads are actually our best fit for our product because, of XYZ, or this size of company is best fit, but we're generating less of those and more of these. So really, we're trying to understand what fit of company are we actually generating, and then we can get into the actual buyer persona themselves. So out of our leads, are they the economic buyer? Like, have they got the same kind of job titles that typically we're able to educate and convert at a higher rate because they're our internal champions, or whatever it may be? Ultimately, we're just trying to give a profile of the leads we're generating month on month, quarter on quarter, to actually see how this is shifting, where our best converting companies typically are in that range, and are we creating more of them, less of them? Has it shifted? Why is that? Targeting changed? Have we saturated a channel? Again, just trying to give ourselves the best picture possible to actually understand this question. So really, what I would build out a complete master deck here. It could have, as many slides as you needed to address this diagnostic. Now, there may only be 10 of those slides that you actually present to the management team or in your reporting meeting, but essentially the appendix should be ginormous to break down all of this data and tell the story of what's happening and why, and step by step, all the way from the top, from closed one down to pipeline, down to pipeline sources. What are those the attributions within those sources? Break it down into leads, and you've got geography, service layers, industries, everything on top of that. Lead quality we then look at, and this is just layers and layers that you can just peel back when you need to, and will hopefully tell you the story of, is this, well, this is the question to answer. This is a super important question to answer. Can we pinpoint a particular downward trend in our analysis, or is this a broad downward trend that is consistent across all channels, all regions, etc.? Now, this will often tell you if this is a particular internal issue, or a channel or region, or some sort of cohort issue independently, or if this is a market issue. And that's going to tell you if you need to figure this out internally, or if you need to actually look broader at the market conditions, at macroeconomics, basically. Because if you see that, actually, you know what? I can't pinpoint a particular issue in all of this data. Everything just seems a bit down, to be honest. Then that's macroeconomics. Like, that is outward market factors that impact businesses all the time. Like, every single market condition impacts the way that businesses grow. Because it might not just be impacting your business, it might impact your customers and their customers and their customers, and there's just a complete knock-on effect. But ultimately, this diagnostic is going to allow you to see that. And if there is a particular channel, then that can be as a result of buyer behavior changing. And the next section, I want to call it chapter 3 now, is those external factors and looking outside the business. Because, again, we're painting the picture here of what is happening in our business, but also our ability as marketers to look outside is often far superior than a lot of other teams in the business, because they're continuously focused. If we think about like operations and manufacturing teams, and even sales and CS to a certain extent, because they are focused on, right, who am I, from a sales perspective, who's in the pipeline, who can I convert as quickly as possible. Then you've got customer success. Okay, I've got just our customers here. I want to prevent them churning and I want to expand them. Operations and manufacturing, how do we actually create all of the things we need to efficiently, all the products, offer the services? Are we profitable on that? Marketing are really the only ones that are looking outwardly at everything, at all of those things. We don't just care about the leads and the pipeline that's going to convert as soon as possible. We don't just care about preventing churn and expanding customers. We care about attention, acquiring new business, acquiring leads, I'm not saying sales don't care about that, but they are more focused on converting their pipeline than actually how do we acquire the attention of a market that's going to drive long-term success for the business. So external factors are something that are absolutely key things to bring to the boardroom, to management as a marketing leader, because there's a good chance that nobody else is looking at these yet. And when we think about channels, and if a particular channel has dipped, which is where I was just going to go a second ago, because whilst this may be that, okay, buyer behavior is shifting, which is why this channel isn't working well for us. Let's take Google PPC, for example. There are multiple reasons why that could dip. It could be a change in Google's structure of the search engine results pages. Are ads positioned differently now? Are they doing, like, trying something weird? Are AI overviews consuming a lot of that information and traffic anyway? Yeah, perhaps they are. But also, okay, so that's a change in behavior and potentially preferences to use that channel in a different way. But also, what are competitors doing? Now, external factors include competitors in many different ways. So you've got competitors that are, new entrants to the market. Are they disrupting your category in ways that you haven't seen before? Have they got an insane pricing structure, insane products and tools that you just simply haven't seen before and aren't able to compete with right now? But also, have they just raised a ton of funding and are pumping it into, Google Ads to absolutely outrank everyone and appear at the top of the page every single time? So they're removing your impression share and gaining impression share on the rest of the market for potentially some extremely competitive, lucrative keywords that once benefited you, but now don't. These are competitor and channel factors to all take into account that sit outside of the business. So again, we're looking at what is happening in an external world. It could be behavior, it could be competitors, but also it could be market and economic conditions. Oil prices, for example, well, they impact everyone in the world. But there are lots of regulations and conditions that can impact industries in many different ways and non-obvious ways as well, because they don't affect your business directly perhaps, but if they affect your customers or they affect your customers' customers or their customers or their customers, the knock-on effect can be really significant and travels all the way back up to impact you. Just because at Blend here we don't require oil to manufacture our products doesn't mean that some of our customers don't need that, or their customers don't need that, or their customers' customers don't need that. Like the knock-on effect of macroeconomics and market conditions are huge. And if there are regulation changes that are coming into your industry, hopefully you have a bit more knowledge of those before they happen, compared to huge market downturns and things that happen in the world that are just totally out of our control. But understanding that they are coming, they're on the horizon, and those things could have an impact to your business, that's really important to call out early and start to factor in how that can shift your results and how that can shift pipeline and where you need to make changes ultimately in order to combat that. It's always good to get other perspectives as well, and unfortunately most of the time we can't just ask our competitors, oh, are you guys having a bit of a crappy month as well, or crappy quarter as well, or is it just us? Because they're not going to tell you. They'll probably tell you that actually they're up 70% year on year when they have just laid off 200 people and are struggling for the foreseeable. Anyway, what you do have the ability to do, hopefully, if you've got a close enough ecosystem of partners that operate in the same kind of area and are trying to acquire the same kind of buyers, it could be dealers in your area, it could be technology partners in your area. If they're selling to similar cohorts of buyers, it'd be really interesting to get their perspective. What's pipeline doing for them this quarter? Is it down quarter on quarter? Is it up year on year? What's happening? Where are the shifts? Are they seeing less upmarket buyers but mid-market's thriving? Are they seeing bigger buying committees? Are they seeing slower deal cycles or faster deal cycles? Understanding what's happening in the ecosystem ultimately, like what we're trying to do here in the external factors looking outside the business is just to step outside of the data of the diagnostic that we just created and think about, okay, what is happening in the broader world? What's happening in the market that's potentially close to us, and get further and further away to actually then start to build that kind of macro picture of what's going on, so we can combine that with our own diagnostics. And ultimately, our job is to make some assumptions of cross pollination of things, and actually reading between the lines of, if something's happening over here but this channel's dipped, or this area, this geography's dipped because of this thing, making those bets on why that might happen is, I suppose, what we have to do. And our job as marketing leaders, after we diagnose the issue and we have all of the data and the value of things in front of us, is to make the decision on what we do next. I just want to interrupt the show to bring you another podcast on HubSpot's podcast network called Marketing School. If you need practical marketing strategies that actually work, Marketing School from the HubSpot podcast network is essential listening. Hosts, as you'll know, Neil Patel and Eric Sue, give you daily 10 to 15 minute episodes packed with actionable tactics from their own marketing experience, building and scaling multiple companies. In their recent episode on AI in marketing, they explain why your customers can switch AI tools faster than you think, and how that changes the way you need to position and market your own products. Not your typical episode you'd expect, but packed with insights and unexpected learnings that you can take into your own business. There's daily insights, real results. Listen to Marketing School wherever you get your podcasts. If you're listening to this right now, you're probably doing what every other B2B marketer is doing, asking, how do I get my brand cited in ChatGPT? How do I show up in Gemini, Perplexity, Claude? And at Blend, we help you do exactly that. We engineer visibility in AI search for B2B companies. We build the content, implement the technical optimization, and track your performance across every major AI platform. So when buyers are researching solutions like yours, your brand gets recommended. We know how to engineer visibility in AI search because we built a framework and proved it on ourselves first. And this took months of experimentation, but in the end it delivered 470 high-value prompt appearances, 80% citation rate across prompts, and 250% more AI-sourced leads. We proved the framework, and now we're starting to roll it out across customers who are seeing similar results. So if you want to dominate AI search in your category, visit blendb2b.com to learn more about our AI search services. So that's kind of the next chapter. Chapter 4 is what you can actually do next. And the answer may be nothing. It might actually be we don't do anything. Let's say you've now waited it out a month. This isn't just a blip. Pipeline hasn't recovered to levels that it was at previously. It's continued the downward trend. Now, it's really important that you're going to be the one who has to bring this up anyway. It's not a case of when do we bring this up, when do we not. If you're reporting on a regular cadence, which you're going to be, this is going to come up. The important thing to understand is that you at least have an answer to what you're going to do next, what you're going to do in response to this. And that's where we get into, the next section, which is what can you actually do? When we think about marketing strategy at Blend, we always start from closest to revenue. What can actually impact revenue closest, and how do we then work back all the way through to like brand and attention gathering? When we think about what we can do to influence the business and improve the health of the business from a cash, from a pipeline, from a like revenue perspective, we should do the same thing as well, right? So the first place to look for any kind of short-term response to recover some additional pipeline, additional closed won revenue is going to be in your existing customer base. It's no surprise, there's been enough studies that prove it is easier to sell to existing customers than to net new businesses, because if you've done your job right, they've seen your value, they understand the benefit you can give to them, the return on investment they can get on your product or service, and how that benefits them as a business to grow. That puts you in a really unique and valuable position to understand at an account strategy level what your options are for that customer and how you might upsell other products and other services dependent on their current usage of your product or service base. And an account strategy is ultimately planning out all of the customers that you have and want to strategically prioritize their growth of, and understand, okay, like, firstly, the information about them: where are they based, who are they, industry they're in, revenue, all of that stuff, their buying committee, key relationships you have. But then actually mapping out the products and services and usage that they have right now. Like, what do they benefit from most? What could they benefit from most? And this is account strategy, ultimately, to understand who your current customers are when it comes to like relation with your business as well, and where the gaps are. Where can you actually upsell to them? Where are the opportunities that perhaps they don't even know you offer this thing, but they've got this value elsewhere, and you actually think they genuinely could benefit from it. We're not trying to like be snidey here and just upsell to customers for the sake of it because we need a bit of extra cash for the business. It's actually, looking strategically, our customers have benefited from these areas before. We also think they could benefit here, but actually they haven't been told about this product or told about this feature before. So let's make sure they at least understand that and we can have a positive conversation about it. Then we need to think about, how do we fuel our pipeline with deals that are the furthest progression along? And when we do think about pipeline, obviously there is one thing to consider before we try and add more to it, which is how do we actually convert what we've got in it better as well. Whilst this might be a pipeline dipping issue, actually being able to convert your existing pipeline at a higher rate means you need less pipeline in order to hit your revenue target anyway. So that's a positive. And also, if there are economic downturns happening and you feel that this could be prolonged further, putting the business in a healthier position from a cash perspective, because your ability to win more business now means that you can protect, everything from a cash perspective is going to be really important. So firstly, understanding how can you actually accelerate this pipeline that you've got right now through is really important. So looking at ways that you can combine with sales in order to communicate your value better to them, help with sales enablement resources, all of the things that we need to do in order to progress pipeline. The next thing that I was just going to touch on is, how do we find deals that are further along the buying process than just let's go and get a cold list that have never heard from us that are out of market to buy, because that is not going to give you quick wins to generate pipeline. So first thing I would look at is, if you have partner channels available to you that typically refer you work, or dealerships that typically sell your products, do they have deals or opportunities that are immediately available without the need to create new demand? They already exist. You just need to find a way to work with them on that deal to ultimately, establish a relationship with that customer and bring them into your pipeline too. So is there a way that you can work closer with your partners, closer with your dealerships, in order to actually promote your services, your products, so they're the ones that are being recommended to businesses that are further along the buying journey, and therefore will be closer to turning into pipeline and revenue for your business? So it's about understanding who's in the market right now as far along as possible, and how do we actually attract their attention and get in front of them. Usually from a marketing only perspective, that's a really, really hard thing to do. And this is often a cross collaboration with your revenue teams, with the person that owns that kind of partnership. But if we were just, as a marketing team, going to try and go into the market and find whoever's in market and is immediately looking for a solution and is basically in the pipeline already, We're not going to be able to do that. You can have all the best intent data in the world. It's not going to tell you that somebody is actually already chosen your product, like is already in market and are basically ready to buy. But there are going to be partners out there, dealerships out there that have your services, products, whatever it may be, that can refer you that work. So similar to our marketing approach where we'd work back from revenue, we're trying to identify the quickest win opportunities for us. And again, like we look at our existing pipeline, see what we can convert there. We look to our partners to see if they have deals that are further along the buying journey than anybody else. But then we need to look at the intent signals around us as well. So our existing website visitors, are we doing the best we can to convert those? Now that might be looking at conversion rate opportunities, optimization opportunities on your website. How do we convert more of the demand we're already creating and actually come to our website? How do we then capture that into high intent leads? How do we run retargeting campaigns so that we maintain a level of mental availability while they go through the researching and evaluation phases, and make sure that we're going to be on that shortlist when the buyer comes to, curating it in their brain. But also looking at intent signals from sources like HubSpot's buyer intent, from ZoomInfo, Apollo, Cognism, whatever it may be, intent signals to say that a company is interested in a particular topic, intent signals to see if they've raised funding, if, the signals that correlate with entering the market for your particular thing, the buying triggers that mean that they might come into market for your product at a reasonable time in the future that isn't who knows when, because that's going to narrow down your pool of targeted businesses and people into a narrower cohort that are more likely to come into market to buy sooner. And that's essentially all we're trying to do here, is prioritize where we put our effort into the businesses that are going to come into market sooner and fuel our pipeline as quick as possible. This does all mean that there are probably going to be some decisions you have to make in order to shift some budget from demand creation and brand building to capturing demand. And again, this is the job. Ultimately, this is what we have to do sometimes. And there's tons of resources out there, podcasts out there, which will tell you how important brand building is, and your budget should always be 80-20 in favor of building brand compared to capturing demand. And for the most part, I don't actually disagree. I think it is totally fair that if you want to have long-term effectiveness at building a brand in your market, then you need to often weight much heavier into creating demand and building brand over time. But in times of need, in economic downturns, in times where the business ultimately needs you to act as a marketer to bring in more leads, more pipeline at a shorter space of time, you're going to have to make the decision for the good of the business to shift some of that budget. Now, that doesn't mean to say that it's not going to impact you in the future. It will, but your job is to minimize the long-term impact while maximizing the short-term benefit. Like, that is ultimately weighing up all of your options that you have available to you, where budget is currently deployed, where resources are currently deployed, and where you can redeploy budget, resource, people, etc. into the best areas possible to give the business short-term wins but long-term success as well, mapping out everything that you have and what your options are and taking those to the business. I think there's a definite difference between acting irresponsibly when it comes to short-term change and when it comes to making short-term actions and, to a certain extent, some low-cost exercises. It could be, building better relationships with partners, or re-engaging closed loss pipeline, or accelerating your existing pipeline. This doesn't all require tons and tons of budget, and they're not representative of huge strategic change. They are adjustments that can be made without compromising your long-term brand building. If you do get into a stage where, okay, we're now 90% weighted into demand capture, that is going to have a impact on the business, and that's a conversation you can then have, because there are potentially other areas of the business that can make adjustments in order to not damage the long-term growth plans for the business. And these are just all conversations you can have with the data, with the options that you can present to them. Okay, I feel like I've been going for quite a while here, and we're at the last chapter, which is looking at the full picture and not just one metric. There is a real risk of, when that single metric dips, to just isolate that and assess the health of your marketing, your strategy by one single metric. But looking at the full picture of close rates, average deal size, deal quality, conversion rates at every stage, lead volume, traffic, MQL quality, channel by channel, region by region, service, industry, company sizes, your ICP, everything that you have to create that layered view of what is happening inside of your business and what's happening in the pipeline creation process is going to give you the full picture of what's happening, and not just make assumptions about one thing. And it may lead to the decision that we don't need to do anything, actually, because we've now given it a quarter. The third month in the quarter has recovered. We're still going to keep an eye on this, but it looks like we're trending back in the right area, and it's pure macroeconomics that are affecting this. And that's just the life of a business ultimately, and that's why you have cash flow reserves to account for those times. But I suppose, the key closing thoughts here is that the visibility that you can have into marketing, into your business, is the prerequisite for everything thereafter. If you don't know what's working already, then you can't respond intelligently when that thing stops. So actually having that complete visibility available to you is just so important. And there's enough studies out there to show that businesses who invest in marketing during downturns are the ones that perform better thereafter, because they've been able to influence a market when they're out of market. We're not just completely transforming our entire strategy to just capture people who are in market to buy. We are still continuing to build our brand, even though right now those people, those businesses might not be coming into market to buy. We're building the mental availability, the authority within their space, so that when they do come into market to buy, and that could be in a year's time, once the downturn is over, then we will be in a much stronger position than competitors who perhaps overweighted into capturing short-term demand. But yeah, it's like, this is, the fun game of marketing, right? This is being able to diagnose a problem and make adjustments where's needed for the best short-term and long-term results, which is, the fun job. That's all part of it. So if we recap where we've been on in this episode, when marketing numbers drop, doesn't matter what it is, I focused on pipeline a lot here, but when they drop, the process we're going through is first diagnosing, then deciding. We're not going to restructure everything we're doing. We're not going to be panicking based on a blip. We're going to break down our data metric by metric, by source, by region, by industry, by all the things that could have a concentrated area of effect, and check externally for context, identify the short-term levers we can pull, and see how we can combine all of that while protecting our long-term brand investment, all while we do it. So super easy, right? But it can be very satisfying to actually go through this diagnostic, make the changes required, and see them pay off, because you've had the insight to be able to go and do that. I think that is probably about it for this episode. I'm surprised I've been able to ramble on this long. I'm actually quite impressed. Who knew that one person could speak for so long about marketing? But I suppose it's the sport, right? Hopefully you found this episode insightful. I'd love to know if solo episodes are a thing that people enjoy, or if you actually just want me to never do one of these again, and you want Phil back and Josh back and Amanda back and everybody else who comes on this podcast. But yeah, let me know. Hopefully that was insightful at least a bit. I found it useful as an exercise to go through and remember all the bad times ultimately, and what you do to diagnose the issues and getting thoughts from the rest of the team and things. It's been really useful. Hopefully this episode was helpful to you too, and I'll catch you in the next one. Bye everyone. Before you go, if all you can think about right now is AI search and how buyers are using it to find products in your category, we should talk. At Blend, we've built a proven framework for answer engine optimization. We tested it on ourselves first and saw 470 high-value prompt appearances, 80% citation rate, and a whopping 250% increase in AI source leads. That's real high-intent leads who are finding us through AI search. We've since rolled it out to dozens of clients who are now seeing similar results. Our AI service engineers your visibility in ChatGPT, Perplexity, AI mode, Gemini through structured content, schema markup, and continuous optimization, and measurement through our partner Scrunch. If you want to show up when your buyers are asking AI tools for recommendations in your category, find out more about our AEO services at blendb2b.com. Thanks for listening, and we'll see you next time.